Back. So if you're still paying off any debt, including a house or a car, you really should listen up. According to Thalia Petousis, a fund manager at Allan Gray, consumers should prepare for an interest rate hike this week because of the rising inflationary pressures and global energy shortage. So with just a few days left until the Monetary Policy Committee announces a decision later this week, we ask, is the repayment party over, and will the Reserve Bank this month raise historically low interest rates? To help us answer these questions, Thalia Petousis joins us now via Zoom. Thalia, a good morning to you. Thank you so much for speaking to us. So let's start here. Should we expect interest rate hikes this week?
Okay, well, whether or not they come, this week or early next year is currently unclear. But as you've said, what is clear is that the MPC is going to need to act. And this life jacket that the South African Reserve Bank has offered to indebted consumers is going to begin to deflate. So there are a lot of global inflationary pressures building at present. We saw in the US, their CPI, consumer price inflation, come out at north of 6% recently, which is a decade high. We're seeing the rising price of oil and gas affecting the cost of manufacturing, affecting the cost of food. So these are all factors that our MPC is watching. But I think they're in a very difficult position currently. And I did hear one MPC member neatly sort of summarize it as the head is in the oven, but the feet are in the freezer. And what he was referring to is the uneven nature of South Africa's domestic recovery since the COVID-19 pandemic. So, I mean, we've seen agriculture do very well. We've seen the mining sector shoot the lights out. We've seen the financial and bank sector do sort of okay. Industrials are probably quite weak. And then obviously, as we're all aware, tourism and leisure has been sent to the doldrums. So these kinds of economic nuances that monetary policy will struggle to address. It's ultimately a blunt instrument setting one level of national interest rates for all sectors within the economy. So that is something that I think our MPC or our Monetary Policy Committee is very aware of. So they're balancing that and potentially a weak South African consumer against rising inflationary pressures. So they may not act now as early as this week, but if not, we should see them early next year come through with the first of those rate hikes, moving us away from this record low repo rate of 3.5%.
Yeah, well, with that analogy that you made, head in the oven, feet in the freezer, it's hard to guess really which way they're going to go. But I want to talk a little bit about just how the current interest rates have been able to give some sort of relief, if at all, to South Africans. Have we seen the impact of that?
So we did see housing sector sort of pick up, and a lot of first-time home buyers come through into the mortgage market, buying sort of your 1 million rand to 2 million rand homes, benefiting from a lower prime rate. But other than that, we didn't see much in the way of private sector credit extension. So consumers in the private sector haven't necessarily been coming out to take advantage of these low rates. Where they may have been benefiting consumers is those who are highly indebted, who are obviously paying off, their loans at a lower rate than what they would have previously been afforded. And certainly you can imagine that in the hotel and leisure industry, those with many borrowings have been benefiting from the repo rate being slashed by about 3%. But it hasn't necessarily fueled domestic demand. And that will also weigh on the SARB's mind, because the inflation that they're seeing coming through at present is probably more driven by global supply factors than it is by the consumer environment or the domestic demand environment here in South Africa.
Yeah, is there a trickle-down effect from the current insufficient national energy supply issues that we've had that essentially could possibly affect our interest rates?
Definitely. So we're all familiar with load shedding and our insufficient national energy supply. That actually has a very inflationary effect in our economy. I mean, we've seen Eskom put through double-digit increases in terms of electricity tariff hikes to municipalities. I think they've been putting through to the order of 15% year on year. Now that raises the price of electricity, which then raises the price of manufacturing. It raises the price of doing business in South Africa, and that can filter through to all prices into the economy, can filter through into the food price, which is very heavily affected by the price of manufacturing and also, incidentally, by the cost of transport. And we've seen as well, the fuel price increased by about 20% year on year. So these will all have downstream effects on global prices, on local prices within South Africa.
Yeah, I think essentially, though, what we're hearing from a lot of analysts is that an interest rate hike is coming eventually, which is essentially what you're saying. What then do we tell consumers about how they prepare their pockets?
I mean, they should prepare for the fact that, as I've mentioned, this life jacket they've thrown should deflate, that we should see increases in interest rates. Hopefully it will be gradual, so probably to the tune of 25 bips sort of at successive meetings or with a gap in between meetings. But consumers should be cautious where they have a high level of borrowings. If they can afford to deleverage themselves to repay, maybe now is the time to begin to look to do that.
Well, Thalia, thank you so much for your time. That was Thalia Petousis, Fund Manager at Allan Gray.